Silver just hit a record high of $83.62 per ounce following Trump's military strikes on Venezuela and the capture of President Maduro. But here's what most investors are missing. This isn't just about geopolitical panic buying. Venezuela sits on massive untapped silver reserves, and what happens next could reshape the entire silver market for years to come. Today, we're breaking down exactly what the Venezuela situation means for silver prices, the immediate spike, the hidden mineral wealth, and 3 scenarios that could send silver either soaring past $100 or crashing back to reality. Let's dive in. The record-breaking rally. Silver has experienced an extraordinary surge. All-time high, $83.62 per ounce, reached during the crisis. Current trading, around $78 per ounce, as of January 4, 2026. 12-month gain, up 181% year-over-year. Outperforming gold. Silver has surged faster than gold throughout 2025 to 2026. Why the panic buying? 3 immediate factors drove silver to record highs. Safe haven rush. Investors flee to precious metals during geopolitical crises. Supply chain fears. Concerns about global mineral supply disruptions. Dollar weakness. Military conflicts often pressure the US dollar, boosting commodity prices. Analysts predict silver could move toward the $75 to $78 range in the near term, though it's already trading in that zone with high volatility. The gold-silver dynamic. Gold also hit record highs, with experts targeting $5,000 per ounce by late 2026. When gold rallies, silver typically follows with even more dramatic moves due to its smaller market size and dual role as both a precious metal and industrial commodity. Here's what makes this situation unique. Venezuela isn't a major silver producer now, but it has significant unexploited reserves. Current production, minimal. 2020 production, just 480 metric tons. 2019 production, 558 metric tons. Peak production, 2016, 1,675 metric tons. Trend, sharp decline over past 5 years. To put this in perspective, global silver production in 2019 was approximately 27,000 metric tons. Venezuela represents less than 2% of global output. But here's the critical part. Venezuela hosts significant deposits of critical minerals including silver within the mineral-rich Guayana Shield, but commercial production remains negligible. The Guayana Shield mineral treasure. The region has deposits of gold, silver, uranium, nickel, and phosphates, concentrated in the southeastern highlands. These deposits have been explored but never properly developed due to political instability under Maduro, lack of investment and modern technology, sanctions preventing foreign mining companies, infrastructure collapse, corruption and mismanagement. What this means? Venezuela's silver story is about future potential, not current supply. If the U.S. stabilizes Venezuela and opens it to Western mining investment, we could see substantial new silver production within 3 to 5 years. Silver's dual nature. Unlike gold, which is primarily a monetary metal and store of value, silver has a split personality, 50 to 60% industrial demand. Electronics. Every smartphone, computer, TV contains silver. Solar panels. Silver is the most conductive metal for photovoltaic cells. Medical applications. Antibacterial properties. Electric vehicles. EVs use 2-3x more silver than traditional cars. 5G infrastructure. Growing demand for connectivity. 40 to 50% investment demand. Physical bars and coins. ETFs and futures contracts. Safe haven during crises. Why this matters for Venezuela. Silver's status as a critical U.S. mineral, combined with supply shortages and low stocks amid rising industrial and investment demand, has driven its spectacular rally. If Venezuela adds significant new production capacity, it affects both the investment narrative, more supply equals lower prices, and industrial supply chains, better security equals stable manufacturing. Global silver market fundamentals. Global mine production fell for the fourth consecutive year in 2019, declining by 1.3%, with primary silver production down 3.8%. Key supply facts: where silver comes from. 70% is mined as a byproduct of copper, lead, zinc, and gold mining. 30% from primary silver mines. This means silver supply is somewhat inelastic to price changes. Top silver producers pre-crisis. Mexico leading producer. Peru, China, Russia, Chile. Venezuela doesn't currently make this list, but it could with proper development. The supply deficit reality. The silver market has been running structural deficits, demand exceeding supply, for several years, particularly due to surging solar panel installations.
Ev adoption aceleratın.
Investment demand spike. Industrial stockpile drawdowns. Venezuela's potential impact. Minimal short-term. Takes 5 to 10 years to develop major mines. Significant long-term. Could add 1,000 to 3,000 metric tons annually. Psychological impact now. Perception of future supply can move prices immediately. Scenario 1. Bullish. The perfect storm. $100 plus silver. What happens? U.S. successfully stabilizes Venezuela. Geopolitical tensions remain high. Ukraine, China, Taiwan, Iran. Federal Reserve continues rate cuts. Dollar weakens further. Green energy transition accelerates. Investment demand surges. Silver price target. $100 to $120 per ounce by late 2026. Probability. 40%. Why it could happen. Experts already targeting $5,000 gold by late 2026, which would pull silver higher. Industrial demand is structural, not cyclical. Supply can't increase quickly enough. Central banks diversifying reserves into commodities. Inflation hedge demand remains strong. The Venezuela catalyst. Even if Venezuelan production won't come online for years, the narrative of U.S. control over strategic minerals is bullish for commodity prices overall. Neutral. Volatility with consolidation. $65 to $80 range. What happens? Venezuela's situation remains uncertain for 6 to 12 months. Silver experiences high volatility but no clear trend. Industrial demand steady. Investment demand fluctuates. Federal Reserve pauses rate cuts. Competing safe haven narratives. Crypto versus metals. Silver price target. $65 to $80 range with 20% plus swings. Probability. 35%. Why it could happen. Markets hate uncertainty. Could see profit taking. Some investors may view $83 as overextended. If Venezuela stabilizes quickly, risk premium disappears. Industrial demand growth offset by recycling increases. Gold-silver ratio normalizes, currently extreme. Key levels to watch. Support. $70. Psychological and technical. Resistance. $85. Recent high. Breaking either triggers next major move. Scenario 3. Bearish. The reality check. $50 to $60 silver. What happens? Quick resolution to Venezuela crisis reduces geopolitical premium. Federal Reserve signals fewer rate cuts than expected. Dollar strengthens on safe haven flows. Industrial demand disappoints. Economic slowdown. Profit-taking after 181% gain. Crypto diverts safe haven demand. Silver price target. $50 to $60 per ounce. Probability, 25%. Why it could happen. Silver's 181% gain is historically extreme. Mean reversion is powerful after such moves. If Venezuela adds future supply expectations, forward prices drop. Global economic slowdown would hurt industrial demand. Technical indicators showing overbought conditions. The contrarian take. A pullback doesn't mean silver is dead. It could be a healthy correction before the next leg up. Many analysts would view $50 to $60 as a buying opportunity. What's actually under Venezuelan ground? Venezuela's government recently claimed 340 million tons of nickel and huge copper resources in its reserve base, along with significant black sands like coltan and thorium-bearing rare earth minerals in the Guiana Shield. While these claims need verification, the geological potential is real. For conservative investors, physical silver. Buy during dips. Set limit orders at $70 to $75. Store securely. Allocated storage or home safe. View as 5 to 10% portfolio hedge. Dollar cost average if volatile. Silver ETFs. SLV, iShares Silver Trust. Track spot price. PSLV, Sprott Physical Silver. Physically backed. Lower premium. More liquid than physical, easier to trade. Target allocation. 3 to 5% of portfolio in silver exposure. For aggressive traders. Silver miners. More leverage to silver prices. 2-3x moves. Higher risk, higher reward. Research individual companies carefully. Consider junior miners for explosive upside. Option strategies. Buy calls on SLV if bullish. Sell puts if looking to accumulate at lower prices. Spreads to limit downside risk. Silver futures. Highest leverage. Not for beginners. Requires significant capital and risk management. Can profit from both up and down moves. Target allocation. Only with risk capital you can afford to lose. For long-term holders, the strategic view, silver is essential for green energy transition. EVs, solar, 5G all require silver. Supply deficit likely structural, not temporary. Venezuela potentially adds to long-term supply security. Action plan. Build core position at current levels. $75 to $80. Add to position on any dip to $65 to $70. Hold through volatility. Trim positions above $100 if reached. Timeline 3 to 5 year holding period minimum. Risk number 1. Venezuela situation deteriorates. Prolonged instability equals no mining development. Regional conflict spreads. U.S. withdraws or fails to stabilize. Result. Geopolitical premium persists, but no supply solution.
Risc 2. Rapid de-escalation.
Quick political resolution. Risk premium evaporates overnight. Silver could drop 20 to 30% rapidly. Result. Profit-taking causes sharp correction. Risk number 3. Industrial demand collapses. Global economic recession.
Solar installation slowdown. Ev adoption stalls.
Result. Fundamental demand driver disappears. Alternative to African/Russian supplies. Stabilizes industrial metal supply chains. Potentially caps prices long-term. Bearish. But if it fails, increases geopolitical risk premium. Bullish. Highlights supply vulnerability. Bullish. Reduces investable mining jurisdictions. Bullish. This week, assess your current exposure. How much silver do you own? What percentage of portfolio? Physical versus paper versus mining stocks? Set price alerts. Alert at $70. Potential buy zone. Alert at $85. Resistance/sell zone. Alert at $60. Strong buy zone if it happens. Review your risk tolerance. Can you stomach 30 to 40% volatility? Do you have 3 to 5 year time horizon? Is this speculation or strategic allocation? Research mining companies. Look at companies with Venezuelan exposure. Research silver mining ETFs. SIL, SILJ, SLV, PSLV. Understand cost structures and leverage to silver price. Consider dollar cost averaging. Don't go all in at once. Split purchases over 3 to 6 months. Buy dips, trim strength. Rebalance quarterly.